Let's see if your stock investing strategy can beat the market for decades. Here we are at ValueGlance.com and we're going to learn about the Backtester feature. So go to this sidebar here and down to Backtester. Now when you come to the Backtester, you can read this little info bubble to learn more. But the idea behind the Backtester is that you can use real historical stock market data to actually test your strategy and see how you compare with the market. So if you scroll down here, you see some FAQs you can check out for more information. We've even included some sample strategies for you to take a look at here. So if you click on Learn More, you can see examples of backtest results here. So there's a few examples shown here, and you could go ahead and click through them to see them in more detail. But what about constructing your own strategy? So that you can come over here and click the button Create New Backtest. You'll be brought to this screen. And so there's two steps. In the first step, you can select which screeners you want to use. And so if you saw our video on the ValueGlance screeners, your stock screener, you know that you can save your own customized screener and test it out in the Backtester. So we look at some sample screeners here. We just put these here so you can get started and thinking about a few different examples. But let's say you built a customized screener. You can go ahead and test that here. So let's, for example, click Quality. And in step 2, we want to set up our backtester. So how often do we run it and evaluate it? And so the first step is selecting annual or quarterly to rebalance the portfolio. This means that every quarter or every year, we apply the screener, going back 35 years of data. We apply the screener, see which companies pass that metric, screening metric, and then we form a portfolio. And then we hold that for either 1 quarter or 1 year, and then repeat the process. So that's the difference between annual and quarterly. For the backtesting period, you can go all the way back to 1990, but if you want to adjust that, you can adjust it here, and you can go up to the most recent quarter, for example, Q4 2024. You can name your backtest, backtest 1, and then you can go ahead and click Run Backtest. And so you'll come to this screen, you could click go back to home, and you'll see in the backtest history, here is an example of one that I ran before that was already completed. And then you could see the one that you just started and it should say in progress and then change to completed. Now, once it's completed, you can come and click on it. So this is an example I've already ran. And here's what you'll see. So this is the result of the backtest now looking at ROIC and free cash flow yield. And so if we want to see the applied filters, we can come down to the bottom here and we see the market cap, the ROIC, and the free cash flow filters that we're applying. But the main result is shown in this plot here. And so you can see in brown, this is the result of the backtest over time. And if you want to zoom in, you can adjust the sliders here to zoom in. And we see the S&P 500 is shown in blue. Now, if you want to toggle that on and off, that just shows how we did compared to the market. So the market is this line all the way down here. And you can see over the years, we did very well. The results are shown here. So 20.24% was the compound annual growth rate, the CAGR of our strategy. And you can see the brown screener strategy that turned $1 over this time period of the backtest into over $630. At the same time, the S&P 500 we see grew around 8.5% annualized. That turned $1 into over $17. So clearly our strategy is a winning one over time. But now here we can barely see what's happening when we look farther back in time because we're looking on a linear scale. So if we come here and toggle to a log scale, we see a much clearer result. So you notice here, this is the growth of $1 plotted here starting at $1, and we see how it develops on a log scale. So remember, a linear straight line on a log scale corresponds to exponential growth. And now we can see the S&P 500 has the tech bubble, has a housing bubble, and then has been moving along. And we see up here in brown how our strategy was doing. And then this tooltip pops up here so you can see the top 5 tickers, the returns, and the weight in the portfolio. Now, if we click on any quarter, we can see a different pie chart forming on the right. So if we click on different quarters, what we're looking at here are the different companies that we would buy, which passed our metric, and we hold for, in this case, quarterly until we rebalance. We could see the return for that quarter here. This is Q2 2017, a return of plus 7% in that case. And if we scroll down here, we can see the different tickers and the returns. So you can see 6% here, 2% here, here's 0.97, so a minus 3%, as well as the weights at the end of the rebalancing period. And so this allows us to visualize how many companies we're holding. Here in this case, we had 18 companies, and we can go through, click, and see how we did at different times. And so putting all of this together, what we see is that over the long term, we can test on real data to see how our strategy, our screening strategy, actually performed. Rather than basing it on gut feelings, on intuition, we can put it to the test of time and see what actually happened through the wars, through the pandemics, through the bull and bear markets, to know if we have a winning strategy for the long term.